right, this is the stock market recap for Thursday, June 5th. And boy, we had a wild one. Usually we start with the indexes, go through ETFs, and then the leaders list. Today, with all the news out on Twitter or X between Elon and Trump, we'll actually jump to Tesla really quick. And we saw the highest volume in over a year to the downside today. Highest volume to the upside as well, but resolving to the downside. Tesla already had some relative weakness coming into the session. We came into the 10-day EMA, had a 1-day bounce, followed through to the downside to the 20-day EMA, sat right there yesterday, and today we gapped down and just exploded to the downside. Down 14%. At one point, it was down 17%. And with the action today, we can draw a gap down. And also, because we closed below these gap up zones, we can close those out. Let's see, close here, 284.82. Yep, so that one gets closed out too. And because we undercut that, we change that to a support gap. So overall, really gross action out of Tesla today. Back through the 200-day moving average, closed under the 50-day moving average on massive volume. And that impacted the rest of the market. So now we can jump back to the NASDAQ here. We saw the third distribution day from this rally. First was on the 21st when we were down 1.4% on higher volume than the previous day. We had what I would consider a distribution day on the NVIDIA sell-off news after earnings, even though we finished up 0.2%, that was on heavier volume. Either way, one of those 2 days I would count as just distribution. And then today, down 0.8%, closing right on the 5-day EMA on heavier volume than the previous day. So we're starting to stack some distribution days. Leaders got extended. We'll go through that list in a second here, but definitely a day to kind of pause and check in on the stocks that you're in. Are you in the A plus names? If you're in the A plus names, maybe those are the ones that you try to hold through any turbulence. Any names that you just entered or you don't think are A plus or true leaders, those are typically the names that I sell first. Try to lighten up on exposure and sit through the volatility with my best stocks. SPY, lower, a little bit lower than NASDAQ. Well, actually, finished the day down 0.5%, but we tested the 10-day EMA, closed right at the 5-day. Overall, pretty similar structure to that. IWO, actually great relative strength today. It's technically an outside day, finished flat, bounced at the 5-day moving average, but not doing anything wrong here. Uh, Still think this tests the 200-day simple moving average before more turbulence, but I mean, we'll see what happens to the market later today. ARKK, we rallied again into that resistance gap. Again, great relative strength given the relative weakness in Tesla, but this did start to close into the support gap, so we can lower that a little bit. Bounced off the 20-day. We'll see if we can hold the 20-day or these previous lows, the support gap with whatever Tesla is going to do later on. But actually pretty impressed with the relative strength out of ARKK today, even though it was down 2.8%. And then Bitcoin BTC, we'll actually change this to a 4-hour chart so we can see the after hours news or action down another 1.4%. And overall in the structure, not fully broken, but I would definitely say this is risk off at this point. I don't have any exposure in Bitcoin right now. Made new all-time highs, kind of pulled into what would have been the 20-day moving average. Looked like it was going to bounce, but this is just a lower high now after we confirmed to the downside. So if we're taking a look at kind of check marks for the market to be either risk on or risk off, Bitcoin losing the 20-day EMA is definitely a risk off signal. Now, what I want to do is go through the ETFs and kind of use the ETFs and the leaders to show and demonstrate how I draw some of the unfilled gaps and adjust those. I don't actually do it with KWEB just because that's the Chinese internet group. And because it trades on a separate market, you're going to have way more gaps, and the gaps mean much less. But KWEB led the market today. Makes sense. All the infighting in the US. China's probably going to come out a little bit ahead today, up 0.8%. A little surprising to see XRT so strong today, up 0.7%. Continues to ride that 5-day EMA higher after we overtook the 200-day moving average. TAN, you never want to see that green while the market's red. That's kind of a risk-off signal for me. Because we closed higher into this resistance gap, I moved that to the close of today. And as long as this keeps closing higher into this resistance gap, we'll continue to decrease the size of that. CEBR, cybersecurity, great relative strength today, made new all-time highs, closed positive on the day, and I believe maybe a slight gap up. Nope, not quite. But overall, great relative strength here. We'll talk about some of the components of that ETF in a bit here. FDN, Internet ETF. Let's see if that was a gap, 77 to 77. No gap there, but good strength. Closed a little bit weaker, but still positive on the day. If that comes into the 10-day EMA and holds, this could just be a higher low overall. XBI is the biotech ETF. Because we closed positive, we can shrink this resistance gap. Because we tested this higher one, though, we have to change that now to a resistance gap. So still some chop right around previous highs here, and that makes sense with the market being a little bit weaker today. XME, this looked like it was going to close out this gap down zone. Unfortunately, not with the weak close because we tested that and closed below it. Now I changed the color of it, and it basically I call that a resistance gap now because it's a gap down zone that got tested. By the end of the day, there were still sellers in that zone, so we can't close that out just yet. XLE still continues to be weak. We did test and confirm a support gap down here, but overall below all the key moving averages, this could be a lower high if we confirm to the downside. Not looking great. IGV, once again, uppercuts and fails at that resistance gap. Closes above the 5-day EMA. Still think it's a leading group in the market. ITA, a little bit of a pullback or check back today to confirm the support gap above the 5-day EMA. Overall, only down 0.1%, not bad at all. Continues to ride that 5-day EMA in a frozen rope fashion. We'll zip through some of these other ones that I don't think are as important. Let's just jump to ITB. Continues to show a little bit relative strength off the bottom here, closed right at the 50-day moving average. Needs to confirm higher there, otherwise this could just be a lower high. Semiconductors, higher highs, higher lows, closed a little bit weak, and I believe is down after hours. Yeah, down, let's see, about 1% after hours with AVGO that we'll cover in a second. XLF to the 20-day EMA, bounced right there. That's the financial ETF. NLR, closing this support gap because we closed a little bit weaker. Overall, still holding the highest volume close in over a year here. Into the support gap, into the 10-day EMA. As long as we can start to tighten up there, that could be a spot where you manage risk against the pullback lows. Blockchain, relative strength against Bitcoin, sitting on the 5-day EMA as of now, but with Bitcoin breaking down, I could see this having some weakness as well. Next, we go to the market leaders. I've got 9 on my list, but like I say every time, the market's been so strong that you can kind of interchange some of these stocks. These are just the 9 that I'm going with at this point. CRWD, very strong. Actually going to be one of the long setups that I'll just talk about it now and we could skip it on the long setup. But gap down on earnings, undercut the 20-day EMA, undercut the support gap, but held the support gap on a closing basis. Today, inside candle, again bouncing at the 20-day, closing above that support gap. If this continues to show relative strength recently compared to the indexes with whatever is going to happen these next couple days, building a position through that support gap area with a stop at the low from the earnings sell-off would be a trade that I might take to get in a leading stock in a leading theme during a time of turbulence. As long as the market doesn't completely collapse, this is probably going to be one of your best risk reward areas to build exposure in. CRWV, this gap down today. Unfortunately, we didn't get that gap up to really kind of signal a blow off top. A little bit less volume than yesterday, closed just below the 5-day EMA. I still don't think this is quite done yet. If we follow through to the downside and close like below the 10-day, below this gap zone, then I think this does take a pretty large breather. But um, still closing above the 10-day is in this type of volatility is um, I don't want to say good because I mean it was down 17% today, but n not the worst. I'll say not the worst case scenario. Again, if we follow through to the downside, that's going to be pretty bad. But um, just a little upset that we didn't get that gap up to really get a good risk reward spot to short there. Carvana still frozen rope above that 5-day EMA, higher highs, higher lows, did close red, but closed above the 5-day EMA, so not doing anything wrong. GEV, another stock that was on my long setup, so I'll just cover that here. Think it's still acting really well. Low volume in this chop recently, holding the 5-day EMA. I'm really targeting the support gap area at 465. If we come into there in the next couple sessions while the 20-day catches up, that's going to be kind of my bread and butter setup where a stock breaks out, has a big run, and the first time it checks back into the 20-day EMA, if it lines up with the support gap, you're not going to find a better risk reward area than that. Hood, higher highs, higher lows, but closed pretty weak today. Did this get news of the S&P 500 inclusion? I'm not quite sure, but down about 2% after hours. If we see more volatility coming into the $63 area and that support gap and the 20-day EMA, just like GEV, that's a spot that I would try to build exposure into. Netflix, higher highs, higher lows, continues to ride up that 5-day EMA. New all-time highs. The entertainment section with um, what is it? Netflix, Spotify. There's another one that I was thinking about, but oh, Roblox that we'll get to right now. Entertainment group, extremely, extremely strong. I mean, Roblox has sneakily been the best stock off the low, and not many people or people are talking about it now, but man, just a beautiful chart here. And this is an IPO coming out of a lower base. Definitely a stock that you want to watch. PLTR, we rallied in the morning to test this gap down zone, failed at it. So we changed that to a resistance gap, closed below the 20-day, closed below one gap zone, two gap zones, touched off a third. This could be kind of a shakeout area where you buy. It would be a tough spot, but if the market doesn't completely roll over here, that would be probably your low risk entry point. I'll be looking for a test of the 50-day moving average and this gap zone at 111 over the next couple sessions as a better spot to risk. And ZS going with that cybersecurity overall strength, another gap up, unfilled. Do we have a wick play here? Let's see. High 303.42. Technically higher highs, higher lows, but basically set up as a wick play. Um, for a true wick play, you would want the low, or sorry, the high of today to be below the high of yesterday and have that gap up. But just incredible relative strength out of ZS. Good relative strength out of CrowdStrike today. Cybersecurity, ETF, and a new high. I still think that's a group to be focused on. Next, we've got about 10 stocks to cover in the daily recap. We've already hit Tesla. Let's jump to DJT because we've got the Elon stock with Tesla and the Trump stock with DJT. DJT has been a dog, trading under the 200-day moving average, just continues to be weak, rallied up, one touch, two touch, three touches, falls through on big volume through the 50-day, a little bear flag into the 50-day, and then today resolves again to the downside. This is probably a good short versus today's high, and then you could just manage your risk there. Toast, I wanted to highlight this because it really shows the importance of these gap zones. And I don't think a lot of people draw them or keep track of them. So I really want to hammer that home. It starts with a quality base, double bottom base, rally up into new highs after earnings, have the HVC and a support gap area here that we've tested and held on the undercut of the 20-day, May 30th. Yesterday, June 4th, we held. And then today we were up at one point like 6.5%, 7%. And of course, I post on Twitter or X exactly when it's here to kind of boast, hey, we had that undercut of the 20-day, came into the support gap. That's our low risk entry point that we want to be playing. And turned out to be basically the high of the day. But where did we reverse that? And if you're trying to short this name, where do you want to get in at? It's a gap zone, a resistance gap. We go to a just a 1 minute chart just to show really granularly how tight some of these entries can be. We rally up into it, kind of consolidate, push through, and literally the high of the day was the top of this resistance gap. And then you got immediate response to that area, showing that sellers are still present. We kind of bear flag for a couple minutes into that and then continue lower. So we had support at that support gap. Now we have resistance at the resistance gap. When we kind of pinball between these two, just expect a lot of volatility. Not a name that I want to buy on strength because of action like this. Not a name I want to sell on weakness because of action like this. But that's why we have a different system for kind of different stocks like that. Uber, I should have jumped to this after DJT. If Tesla is going to continue to sell off, maybe Uber finds support at the support gap, kind of pushes through the 20-day EMA. This has been a this was a leader early on, had some relative weakness the last couple days. Maybe this is kind of the shakeout turning point before it gets going again. Dutch Bros, this was on the long watch list yesterday, so I wanted to cover it today. I said that I did not want to buy it on strength because it had some relative weakness early on in this trend. It looked like I was wrong, and you had a pivot. You could still manage your risk. I mean, it hasn't completely collapsed here, but it has that kind of sword candle here where we uppercut two resistance gaps. Well, now it's a resistance gap, and we close below those, just showing, hey, sellers are still present at these areas at the end of the day. Now, with this type of volatility, I'll look for a pullback into the 20-day EMA, into this gap zone around 68 for a higher low entry point, instead of trying to buy it on strength while the market was pretty extended. AVGO, inside candle today, but if we switch to, let's do like a 2 hour chart, down a little bit on earnings. Let me actually switch to a 4 hour so I can just measure that. Down 4.3% on earnings, coming into a gap zone right there. If we switch back to the daily, so we're at that first gap zone at the 10-day EMA, potentially a shakeout tomorrow with market volatility and a gap down on earnings. Looking for a couple different areas at 245, this gap zone, or if we really sell off 230, 20-day EMA, that could be a really steep sell off and then kind of V bottom to get some shares at. That would be kind of a breakout retest as well down here. Don't think we'll get down to that level, but I will be watching the 242 area right there. NVIDIA rallied again, tried to move over that resistance gap, couldn't quite do that, and is down slightly after hours. RBRK had earnings today. Let's check. Just a little bit of volatility, not quite doing anything after hours, so we'll see how that shakes out. Wanted to highlight Microsoft's strength today. If we zoom out, we close over this last gap down zone from all-time highs. So we made all-time highs. Now, if the market gets volatile, see how this 20-day EMA support gap area around 450 holds. Finally, we have Lululemon, which was down about 20%. Yeah, 22% now. If we zoom out, you can see the daily chart just massive, massive sell-off here. So no bueno. Now we'll jump to some of the long setups that I'm watching, and then the short setups after that. So NBIS, uh, after it got relisted, has been a pretty strong stock. It's gone from, let's see, about $15 to 46. Tons of volatility in this name overall, but really good action lately. I haven't, this stock hasn't been on my radar in a bit, so you can see I don't have the gaps drawn. But what we do see here is a gap down, open on the low at the 20-day EMA, close above this support gap. So good shakeout to the 20-day. And then we followed that through with a gap up, opening on the low today, strong close on highest volume since it got relisted. So we'll draw a little HVC area right there. Looking for this in a couple different ways. If we gap up tomorrow, a pullback into the HVC could be bought versus 45 level. Or if we gap down or have morning weakness, once we reclaim the HVC area, pull back, retest, that would be my entry versus whatever the low of the day is. But up 17%. And I really like this 20-day EMA hold. So really want to kind of focus on this name going forward. CRK, we talked about how weak energy stocks have been, the ETF, XLE or XOP. So it's hard to be too bullish about this, but it's also hard to be bearish when you have a chart that's ran up, good quality base, runs up, allows the 20-day EMA to catch up, getting nice and tight here. Um, because of the weakness in the group, it's something that I would rather take on a shakeout, either to the 20-day or the low here, instead of buying a breakout. That's just me. That causes me to miss a lot of these types of setups, but just because it's not a market leader and it's in a weaker group, I want to take that with the lowest risk possible, versus a little bit higher risk and more confirmation there. Spotify, this was the other entertainment stock that I was thinking about. So you have a nice little gap up today, strong close, new all-time highs. If we could pull back into the 10-day EMA, even maybe the 20-day EMA in a couple sessions as the market stays volatile, a breakout retest with the 20-day EMA and gap zone right there, that's a spot that I want to be involved in because it's in a leading group, entertainment. It's a liquid leader in that group, and it's a breakout retest, gap zone, 20-day EMA, has everything I'm looking for a low risk entry point. So we'll be watching that 675 area like a hawk. Duolingo continues to tighten up here. This is one that it has tightened enough. We had a shakeout earlier on in the flag, so it's one that I wouldn't be as worried about buying the breakout on. The one thing that makes me worried is it's not as liquid, and if people are going to be hunting for liquidity, if the market's volatile, you could see a quick break of the range and then a reversal. So if you're going to play this and it starts to get going through the pivot, for me, I would just be moving my stop to break even as quickly as possible because it's either going to work and we're going to get out of this range quickly, or they're going to use that break of the pivot as liquidity, and you're going to see it rally up, spike down, just like Frog recently, we had tight action, rally up, spike down. That's the type of stuff that I want to avoid. I still might put on the trade, but I'm going to put my stop loss to break even as quickly as possible to eliminate that open risk. But overall, great setup. CrowdStrike, we covered that 20 EMA support gap area is where I want to build exposure in. Snowflake, this has been on the long watch list for a while, just chopping at the 5-day EMA, not doing anything wrong. Maybe with this market volatility now, we'll get a pullback into that 10-day EMA or that support gap area at $200. We can build our position there. CRS continuing to ride that a 5-day EMA on uptrends, pullback holding the 10-day EMA on a closing basis. This is one where I'm still watching that 20-day EMA support gap area because it'd be the first test of the 20-day EMA since breaking out. SMR, we're starting to see volatility lighten up, and we're seeing great relative strength compared to the other stocks in the group. OKLO, weakness closing under the 10-day EMA, closing under the HVC area. NNE closing at the 20-day EMA, CEG falling through to the downside, coming into the 20-day EMA. So for me, SMR is the leader of that group. We keep touching off the HVC, the 10-day EMA. We're starting to see volatility pull in a little bit. So overall, good setup. This is one where if we pull back into the 10-day EMA one more time, just trying some shares versus the pullback low would be the play there. QEV, we covered that. We're looking for the support gap area. MSTR, we have a 50-day moving average and a gap zone right here. So if Bitcoin flushes, but it's a quick flush and then like a recapture of that area, this 350 is going to be your low risk entry point. And then KRMN, I did buy a position in this through 44.44. It's in that aerospace engineer. So if we take a look at ITA, that's one of the leading groups in the market. It's an IPO, so an IPO in a leading group, if the market can find its footing, I think this can blast off. The market has more volatility. I think it does kind of like what Frog does, or what I'm a little worried that Duolingo will do, where we move up and then we just spike down. So this is a performance booster type of name for me. I'm not putting a large percent of my portfolio on it, just enough to where if it does get going, I've got a really nice entry point. Just managing the risk. Honestly, I have my stop even at the 10-day, not even the low of today, because it's a performance booster. I want those to be working right away or to stop me out right away. I don't need to be giving them time to figure out what direction they're going to move. Okay, got the short setups next, and we're running a little tight on time here, so I'm going to run through these. AFRM, we've put in a lower high here, second lower high, uppercut of the resistance gap here, and then close below. If we gap up in the morning on the indexes and we take out this resistance gap again, that would be a short entry versus today's high. Again, so really, really tight risk. If I'm wrong a 0.5%, 1%, 2% max. But if I'm right, then this is your A plus risk reward area on a name that has been lagging um, lately. And if the market has volatility and starts to roll over, should break to the downside. SMMT, we covered this yesterday. Just kind of an inside day below the 200-day moving average, below that gap zone. This could be taken either through today's low or an uppercut and fail of the 200-day and the gap up area. LTH, this is Lifetime Fitness, has been acting pretty strong recently, but then had the malfunction bar on earnings, followed through to the downside, kind of just trading sideways while the market's been rallying higher. And then today we get a gap down, close below those key moving averages on pretty big volume. So this just looking for more follow through to take versus either the 10-day EMA or the 20-day EMA and today's low or today's high, depending on your position sizing and your risk tolerance. WGS, this was on the short watch yesterday. We were looking for a breakthrough the key moving averages. We got that today. That should have been your entry point right at 71.55 through yesterday's low. I didn't take this trade, so just kind of watching to see how it plays out here. DRAL, a speculative biotech name. So again, can't take this with a ton of size. And really, we got the A plus entry on the short today as we rallied through these two resistance gaps and then fell back through them. So that is the spot that you would want to really build exposure in. But if this rolls over, taking out today's low, kind of having a 1 or 2% stop could be the play. And then the last couple of names here are less liquid and overall just like super speculative names that we had monster rallies, haven't rallied quite back up to them, back up to the highs like a name like IONQ has done, or RGTI in the quantum space. But we have Butterfly, BFLY, big rally from like 90 cents to $4. We've lost the 200-day moving average, rally back up to it, failed right at that as it's starting to roll over. And now we have very little support down here. Just a breakthrough today's low could be your entry. LAES, another name that had a monster move in December, didn't quite get back up to where it was trading at. Instead of $10, we're trading at 4. And now we've put in a potential lower high here off the rally point high. And if we lose the 20-day EMA, that's a potential short. VVPR, we talked about this yesterday. I did short this today on the VWAP loss. Let's go do like an intraday 5-minute chart. So we had a morning rally and we basically lost VWAP at 660. That was my entry point. So got immediately rewarded from that entry, pulled back, rallied back up to 654. Never tested my cost. Came back a little bit more because of at this point the market was strong. I moved my stop loss to 655, so I wanted to get it basically in the money. That's how I play a lot of these like speculative names. I want to get my stop in the money as quickly as I can. If it stops me out, okay. But a lot of these names that have had monster moves that are starting to roll over, when they do crack, like DFDV last week, going from $50. Now it's down trading to 14. They can crack in a big way. So to skew the risk reward in your favor, I'm always trying to get my stop loss to break even or a little bit in the money in these names. And if they stop me out, they stop me out. But fortunately for me, good day, down -8%. Let's see if we can actually follow through here. On the daily chart, you have a failed breakout, a lower high now. And if the market gets speculative, or if the market gets volatile and we roll over here, there's going to be less liquidity for names like this. And finally, we have QMCO. This was one of the quantum names that jumped from $3 to 90. I think it touched $90. Yeah, 90.64 at its high. One of the names that hasn't rallied back up to highs. We had a rally to 22, then to 14. That 200-day moving average failed, and then we broke to the downside. I did take this short today, around 11:30. No, 11:20. Yeah, 11:25. The low of whatever this candle is, 11:17. But really weak, big volume on the way down, and this is already basically at the base of this consolidation. Seems to me like this is just going to kind of roll over here. We have an estimated earnings date of June 6th, but no confirmed earnings date. I'll just be playing this with smaller size to the downside. So that's the market recap for Thursday, June 5th. Wild day in the market. I expect volatility is going to continue, especially for Tesla and in any type of name that's going to be around that area. We are at a spot where we've had 3 distribution days from this rally point high. The other thing I wanted to cover before we left is NAAIM exposure numbers came in. So this is active investors actually dropped from 88 to 81, which to me was a sign that the market could continue the rally unless we got some breaking news, and we got some breaking news. So now it's time to kind of defend the best names that you have, cut the weaker names, build up some cash. So when we do get those A+ entry points that we're looking in some of the long setups, we can test the waters there. But overall, it's been a great market. If we do kind of correct here, it's just time to relax a bit. All right, take care.